Hello everybody, this is Lara with your end of the week video for gold for the trading week ending Friday 14th of August. I expect the pullback is over and the upward trend for gold has resumed. The next target is at 2180. If we see before a new high, if we see a new low below 1764.12 at any time frame by any amount, then I would expect a sustainable high is in place for gold and there's been a 180-degree trend change. I would expect a big downward wave. Elliott Wave Analysis first, Classic Analysis last. This is the first wave count. It still expects more upward movement and it's labelling this upward movement Supercycle Wave B. The bigger picture at the monthly chart level for this wave count is bearish. It sees gold in a big three-step back pattern labelled A, B, C. So when B is complete, then Supercycle C would be expected for this wave count, but we're not there yet. This wave count, this bigger structure at the monthly chart, is an expanded flat correction. Expanded flats have B waves which make new price extremes beyond the start of their counterpart A waves, hence the new all-time high for gold, and yet this is, for the bigger picture, still a bearish wave count. Supercycle A is seen as a double zigzag. Supercycle B also is seen as a double zigzag. Here is the first zigzag in the double. It's labelled Cycle Wave W. The double is joined by a 3 in the opposite direction labelled X, which subdivides as a double combination. And the second zigzag in the double is labelled Cycle Wave Y. It's labelled Primary A, B, C. And we're looking now for the end of Primary Wave C. It's subdividing as an impulse. 1, 2, 3, 4, 5. If 4 continues any further, it may not move into Wave 1 price territory below the invalidation point. This wave count, importantly, sees this upward movement as a three-wave structure. This is where Cycle Wave W ends, and this piece of movement does look best as a 3. If Cycle W ends there and Cycle X begins, Cycle X here is seen as a double combination, zigzag, X, flat correction for Y. In the zigzag we can see a triangle here for intermediate wave B. This has a much better fit than the more bullish second wave count, which we'll get to next. Okay, let's take a look at how primary C is unfolding at the daily chart level, where it began back down here, the low labelled primary B. Primary C is subdividing as a 5-wave impulse. 1, 2, 3, 4 now looks complete, and 5. Draw an Elliott channel around primary C from 1 to 3 with a copy on 2. I should push that up slightly. Intermediate 4 has overshot the lower edge of the channel. That's okay, fourth waves aren't always contained within the channel, but price is now returned to within the channel. Intermediate 5 may find resistance about the upper edge of that channel. Fourth waves for gold and for all commodities are usually a lot more brief than their counterpart second waves. Here intermediate 4 is a quick zigzag and intermediate 2 is a more time-consuming double zigzag. There's very good alternation between the two and good proportion, with 4 being quicker than 2, which is really normal. I will expect 5 to move at least slightly beyond the end of 3 to avoid a truncation, and the most common Fibonacci ratio for a fifth wave is for it to reach equality in length with the first, so the target has a reasonable probability. If intermediate 4 does continue any further, and it could, then it may not move into wave 1 price territory. At the hourly chart level, here's the end of intermediate 4 and the end of intermediate 5. I may need to move the degree of labelling here down 1. It may be premature to label minor 1 and 2 over. This might just be minute 1 and 2 within minor 1. And so I'm going to leave the invalidation point down here. No second wave correction within intermediate 5 may move beyond its start, below the short-term invalidation point. If intermediate 4 is over there and intermediate 5 has begun, the most likely structure for it to be would be an impulse at minor degree, 1, 2, 3, 4, 5, and the third wave may only subdivide as an impulse. There may now be a series of overlapping first and second waves to start minor wave 3. At the hourly chart level, if we move the degree of labelling within that zigzag of intermediate 4 down 1 degree, this could just be the first zigzag of a double, the first zigzag in a combination, or wave A of a triangle or a flat correction. If intermediate 4 is going to continue sideways next week, then it could be any one of those various Elliott wave corrective structures: a multiple zigzag, a combination, a flat, or a triangle. And all of those, apart from a double zigzag, all of those are sideways movements, and a sideways movement to remain reasonably within that channel or not to have too great an overshoot would be most likely. This wave count still needs some more upward movement. If intermediate 4 is going to be a flat correction, minor B needs to retrace a minimum 90% the length of minor A. For a flat correction, B can move beyond the start of A, and here's the common range for wave B within a flat. For a running triangle, B can move beyond the start of A, and for a combination, X can move beyond the start of W. So a new high for gold does not eliminate the possibility that intermediate 4 may be continuing sideways. Its technical analysis of the strength of upward movement, or rather the lack of strength, may indicate a B or X wave. Although a fifth wave is also weaker than a third wave, so it's a fairly subjective judgment that would have to be made, and we'll also be taking note of the look of the wave count, but mostly technical analysis to differentiate whether or not this wave count could be correct. For now, they both need some upward movement next week anyway. At the daily chart level, if we change the degree of labelling within here, if we look at the subdivision slightly differently in here, it's entirely possible that supercycle wave B could have been over last week, and gold could have seen a 180-degree trend change and be on the start of a huge new downward movement to make a new low below 1046. That's the end of supercycle A. This is an extremely bearish wave count. This is possible. Because this is calling for such an enormous trend change, and because we should always assume that the trend remains the same until proven otherwise, we need some price confirmation of this wave count before we can have confidence in it. The first wave count needs to be invalidated with a new low below this price point before we can seriously consider this very bearish alternate wave count. Back to the weekly chart level now, and looking at a much more bullish wave count. If we see this big downward move here as a complete double zigzag for Grand Supercycle 4, then Grand Supercycle 5 could have begun there. A new bull market for gold could be underway. A new bull market needs to start with a 5-wave structure. If we see cycle wave 1 over here, that works, but now there's a problem within cycle 2. If cycle 1 ends here, then cycle 2 begins here. I'm labelling cycle 2 as a double flat, WXY. Within the first flat, an expanded flat labelled primary wave W, labelled intermediate A, B, C. We can't label this triangle as minor 2 because second waves don't subdivide as triangles. So we have to ignore a rather obvious triangle in this position here. That reduces the probability of this wave count. No matter how I label this part of this movement, for a bullish wave count, we encountered problems in terms of Elliott wave. The bearish wave count does still have a better fit, which increases its probability slightly. Still, let's consider all possibilities. If gold is in a bull market, then a first wave may be over here, a second wave may be over here, and so a third wave begins, and this does have the strength of a third wave. So far within cycle 3, primary 1, 2, 3 and 4 could be complete, and primary 5 may be extending. This is extremely common for commodities, for their fifth waves to extend. Primary 5 may be completing as an impulse, with intermediate 1 and 2 complete, intermediate 3 incomplete, with minor 1, 2, 3 and 4 complete. Let's take a look at this at the daily chart level, where intermediate 2 is this point down here. Here's minor wave 1, 2, 3, 4, and we need to see minor wave 5. The target is the same because the impulse is seen in the same way for both counts, and it has a reasonable probability. That's a common Fibonacci ratio for a fifth wave to exhibit. When intermediate 3 is over, this wave count would then expect intermediate 4, which must remain above intermediate 1 price territory, and then intermediate 5 on up to new highs. The target is for cycle 3 to reach 4.236, the length of cycle 1. That's actually not an uncommon Fibonacci ratio for gold to exhibit, and because cycle wave 1 was so very short, that's a reasonable calculation for the target. At the hourly chart level, here's the end of minor 4 and the start of minor 5, with potentially minute 1 and 2 complete, minute 3 beginning, unfolding as an impulse, 1, 2, 3, 4, 5. Within minor 5, if we change the degree of labelling and a second wave correction is still to unfold, it may not move beyond the start of minor 5 below the short-term invalidation point. At the weekly chart level now for gold, we've got 2 bearish candlestick reversal patterns, adding more weight to the idea that there's a high in place. This doesn't agree with my short-term first Elliott Wave count, and the bearish engulfing candlestick pattern does have support from volume. ADX is declining, telling us that the previous extreme, very extreme upward trend may have ended. There is bearish divergence between price and RSI. That, in conjunction with bearish candlestick patterns, suggests we may have a high in place, and that's one reason why I am publishing that very bearish alternate Elliott Wave count. But I would still rather wait for price to invalidate a more bullish count before we give that one a lot of weight, because it's so very bearish. At the daily chart level, at the high, there is also a really strong bearish engulfing candlestick pattern that has strong support from volume. Look for support about 1800 if price does continue on lower. RSI brought well down into neutral territory. ADX reached very extreme for their upward trend, now suggesting a potential trend change, but no clear trend as yet. MACD bearish and stochastics in neutral territory. This little bit of upward movement here really does lack support from volume. This looks possibly like a little counter trend movement within possibly a new ongoing downward trend, but I want to assume the trend remains the same until proven otherwise. But we did get very extreme at those highs for RSI and ADX, and we do have a strong bearish candlestick pattern at both daily and weekly chart levels. And so if my analysis for the first wave count is wrong, it's that in expecting more upward movement, it is possible we may have a high in place, so just be aware of that for next week. That's all for me with your gold analysis. I hope all our members are having an awesome weekend.